So many of you saw my Meta video when it was around $200 or $220 per share. And I made a video and I said Meta would be a buy under $150 per share. And of course, I got a lot of pushback, a lot of arguments that Meta will never go under 150. Now, of course, the stock did go under 150. And I believe a lot of things have actually changed in my valuation model and everything with Meta. So in this video, I'm going to talk about is Meta is finally a buy as it's reached my price target of $150 or under, and what I'm personally doing if I'm buying Meta or not. So again, I hope you enjoy this video. Now the stock has been a mess. It's down over 62% year to date, and I believe it's trading at 2018 or 2017 type of levels. And the valuation on Meta is actually much better. Now it's sitting at a PE of 10. Now it's traded before at a mean of 26. And this is something I talked about many times. Many investors in Meta, they were saying that if Meta goes back to 26, then the stock is at 3x. But I don't believe it will ever go back to 26. Now it traded at 26 before for many reasons. One of them was we had lower interest rates. The other reason, it had much higher revenue growth. And now Meta is not growing as much as before. Which leads me to my whole analogy about the investment in the metaverse that Mark Zuckerberg is actually talking about. As you know, they're spending a lot of money on capital expenditures, mainly on the whole metaverse project. Even if you look at their income statement, it's pretty good, but only the research and development is going up, so much that the income from operations is actually going lower on, year over year. And this is what's been happening with Meta. Now, many people say that Mark Zuckerberg is kind of stupid to be spending all this money on the metaverse. Now, I believe personally he's not stupid. And I believe he's doing it for one reason. Many are saying, why don't he back up? Why don't he go and just start buying back shares? All right. But I believe the main reason he's actually doing that is he believes that the main core type of business model of Meta is getting more and more mature. And I know I'm going to get pushback on this and stuff in terms of Facebook and Instagram, but this is just the way it is. I mean, it's reaching a lot of people in terms of those platforms. It's not going to keep growing, forever. So the revenue growth is eventually going to slow down. It used to grow at a higher pace, and then it's going to slow down. And it's going to slow down even more in the future, in my opinion, except and only except if the metaverse actually becomes a success. And this could send, Meta on revenue growth of 20 to 30% every single year like they used to have before. And then the PE ratio would go to 25 or 30, which would be an amazing multiple expansion for a company like Meta. So my analogy and why I believe Zuckerberg is really doing this is because he knows his last chance to get Meta back on its revenue growth that it used to have before is to invest heavily in the metaverse and hopes it becomes a success. And it could eventually become a success, or it would be the biggest gamble in history and it would be a total failure. And this will remain, for us to see. So this is what I think about the, whole investment in the metaverse. Now, looking at the net income of the company, it's been declining, which is another reason why the shares are declining. But again, a lot of that has to do with the investment in the whole metaverse type of project. And it also has to do maybe with a little bit of a slower ad spending, which I believe Meta's ad revenue is going to slow more and more in the future as we go into a recession. Because a lot of small businesses do advertisement on Facebook and Instagram. Yes, big businesses do it too. But a lot of small business actually do that because it's much cheaper than doing it on the radio or somewhere else, to be honest. So if those small businesses and even large businesses, they start cutting back on advertising, the ad revenue is going to go down even more, and then the net income is going to go down even more. I'm not saying it's going to happen this quarter or next quarter, but as we go deeper into the recession, this is what's eventually going to happen. So yes, the net income now is low, and it could actually even go, lower, and I would not be surprised if this actually happened. Now, something else I want to really talk about is the whole thing about the share buybacks, because many people say you should invest in Meta. They're doing a lot of share buybacks. It's creating a lot of value for shareholders, which is 100% true. And if you look at the shares outstanding, they have been going down. but they haven't really gone down that much. Why is this happening? Because Meta has a lot of stock-based compensation, which has been skyrocketing as the share price has been going down. So yes, the company is doing a lot of buybacks, and that's great, and it's offsetting the dilution. And now we're finally starting to see the shares outstanding starting to go down. But you also have the problem of the stock-based compensation, which you have it with many tech companies. And not only that, but I found something pretty interesting on Twitter. And this gentleman actually talks about, the whole thing about how Meta actually executed the buyback. And it says a poorly executed buyback program. They spent $48 billion over the past year at an average price of $303. And the current price is $133. And as you could see, the buybacks have decelerated as the stock went down. Now, this is normally the opposite of what you really want. You want the company to buy back shares mostly and only whenever they feel their stock is undervalued, and you want them to even issue shares, even dilute shareholders if, I hope it doesn't happen, but it could happen, if the stock gets very, very expensive, like what happened with the meme stocks, with AMC and GME. They issued stock and they got a lot of cash to pay back debt, which actually was a very smart thing to do. So in this case, this example shows you that not every buyback is actually creating value to shareholders. It has to be done the right way. And I don't even know how Meta could even believe that $300 per share could actually be a fair or even a very cheap price in terms of their opinion. Maybe they were just doing it to offset stock-based compensation. But still, it's a lot of buybacks. You could see it over $7 or $8 billion at a $356 price. I don't really know how they would believe the stock was cheap back then. But again, we talked about a lot of things, and Meta is now under $150 per share. So it's time for me to go into my valuation model and talk about, my valuation model and see if Meta is a buy right now, or if it's maybe still a little bit expensive, and if I'm personally buying it or not. All right. Now, Meta now is around 117 billion of revenue. I put in 10% revenue growth for Meta. Now, why did I decide to do that? Because that's how they have been growing around 10%. They grew more before, but I believe they could even grow possibly less than 10% if we have a very bad macro environment. But I believe 10% for a company like Meta is fair to expect in the future. Unless something big happened or something with the metaverse became a success in 2023, which is likely not going to happen, I believe a 10% revenue growth is somewhat fair for a company like Meta, and they could even grow less if we do have a big pullback on ads spending. Okay, now net income margin has been 23%, so I kept it 23%. Well, before they started investing in the metaverse, it was, I believe, 32%, but it went down to 23% as they started investing. So I used the same net income margin of 23%. PE ratio right now, Meta is trading at a PE of around 10. Now, I believe personally 10 is a little bit cheap, it's understated, and the main reason I believe that is because there's a lot of uncertainty around the metaverse. Whenever this uncertainty goes away, and we're gonna know if it's going away or not from now till 2027, where my valuation model is 5 years from now, we're going to know if metaverse is a success and the company gets a massive multiple expansion, or if the company, the metaverse thing becomes a failure, and then people say, okay, now it's a failure, now we know that Zuckerberg is going to focus on the core business. So this uncertainty is eventually going to go away, which should somehow put in a multiple expansion for Meta of a 15 PE with around 8 to 10% revenue growth. I believe this is fair. If revenue growth goes up to 20%, then you could maybe justify a 20 PE. But I believe 15 PE is fair. Now that would get me to around $652 billion of market cap 5 years from now, or an upside of 92% or 14% compounded. So therefore, looking at this valuation model, and many of you tell me, you're too bearish on stocks, give me a stock to buy. Well, I personally believe Meta is not really expensive at those prices, and it could be a buy at 92% upside. And if you have some kind of a call option with the metaverse, if it actually became a success, the upside could be up to 150 to 200% over the next 3 to 5 years. So I believe Meta stock could be a buy at those prices. I'm personally not buying it, not because I don't like Meta, but I'm personally trying to structure my own portfolio to be kind of a recession or kind of a stagflation resistant type of portfolio, meaning ad spending is more of a commodity, and I have some exposure to the ad spending, with cheap stocks, kind of in the streaming space and stuff, which are much cheaper than Meta. So I don't want a lot of exposure to this industry, and I'm trying to buy stocks kind of in companies that people really need and not just want, and have some kind of a pricing power and necessity type of businesses. So this is why I'm not buying Meta. I think, the ad spending is eventually going to slow down, but that's a different story. If you're looking to buy Meta right now, under $150, I think the stock is a buy. It's not a steal, it's not the best bargain of the stock market, but I think the stock is a buy for whoever wants to take a chance on the whole metaverse project, and if not, maybe you could double your money over the next 5 years. So this is my video for today. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing, and I hope to see you in another video.